In this video, we are going to look at the 4 most important numbers you need to know for your retirement. So many people are hyper-focused on, do I have enough to retire? But they haven't really done the work behind that to figure out how much is enough and what does that even mean. So if you know these 4 numbers and they work together, you should be all set. Now, first one is pretty easy. It's your spending number. How much are you truly going to be spending in retirement? Second one, what is your after-tax cash flow? What are your sources of it? What do they add up to? The third is just a plug. You take that spending number you need to get to, reduce it by those after-tax sources of cash flow, and then how much do you need to fund to spend to get the rest of your spending? And then the final one is then what size investments do you need to hit that plug number? So let's break those down a little bit more in this video. My name is Scott Caulfield. I'm a CPA and a CFA charter holder and the founder of Sophos Wealth Management. Now, first of all, I really want to spend some time on spending. A lot of people, if I ask somebody to come up with a budget, I feel like I consistently see people, when they build it from the ground up, come in somewhere around 30% less than what they actually spend. I always ask clients to bring me at least 2 years of tax returns. We try to figure out what was their after-tax income from the last 2 years. Then we look at how much money did they actually save? What did they put in the bank? What did they put into their 401k? That kind of gives us a quick approximation of their true spending. Let me give you an example. If somebody's tax return showed they made an average of $110,000 over the last 2 years after tax, and they save $10,000 a year into their retirement accounts and nothing else, then we would say, hey, your spending need the last 2 years is $100,000. If I ask that client to come to me with a bottoms-up budget, I can almost guarantee they're going to come in with something around $70,000. Some people are closer, some are further, but we just all forget how expensive life is. We forget all those surprising one-offs that we don't think are going to be permanent and in fact just show up every single year. Now, when we take the spending number, there are maybe some adjustments we're going to make. For instance, I've seen clients who are currently funding their kids' college education. Obviously, once those kids leave college, we're going to want to make a big adjustment for that. So you can make tweaks to that, but I always kind of caution, be conservative in that approach. A lot of people are just overly optimistic on how much they're going to cut spending, especially in retirement. You go from sitting at a desk 40 hours a week to having all that free time. Well, activities often cost money. So it's something to keep in mind, especially for the early part of retirement. Now, the second thing we look at is after-tax cash flow. Most commonly, this can be Social Security. And you can just go get your statements from the Social Security Administration and kind of project out where that's going to be. You can also, make tweaks if you need to based on what the Social Security assumptions are. Some people might have pensions, even fewer might have rental income, royalties, so on and so forth. But that's kind of the second piece. Then we're left with a plug number. How much more in after-tax cash flow do we need to fund our spending? Let's take our prior example of a couple who's spending $100,000, and that's not going to really change in retirement. Let's just say hypothetically they had $60,000 in other sources of after-tax cash flow, Social Security, maybe a little pension. That leaves them with a plug figure of $40,000. So now we've got the first 3 big numbers figured out, and that leaves us with the common one. How much do I need? What are the investments I need to fund that plug number? Now, I'm a huge fan of safe withdrawal rates. I think it's just one number that encompasses a lot of factors. You're looking at investment returns, inflation, potential longevity. They're kind of all encompassed in that one number. Now, Bill Bengen famously came up with the 4% withdrawal rule. That was a portfolio that would be safe for at least 30 years. That's kind of been updated with more recent asset allocations and better research. And that number may be now between 4.5% and 5%. Now, you always want to kind of take into account your specific circumstances. Do you expect to have a lot of longevity? Do you have a history of family who live a long time? Or maybe a history of family illness? You may not. What are starting stock market valuations? If it's expensive, you might want to be on the low side on a safe withdrawal rate? Do you have goals to leave money to heirs or charity? And you might want to tweak that. But you come up with a safe withdrawal rate somewhere around 4 or 5%. If you feel like you need a safe withdrawal, if you feel like you need a withdrawal rate of 7, 8% or higher, you have to accept the fact that that has failed a number of times historically. So just something to keep in mind. And that's kind of the final number that'll tell you whether you are ready for retirement or not. So hope you found this video interesting. I kind of expand on a lot of these topics in my other videos. Appreciate if you'd like this, subscribe to my channel and share it with anyone that you think could benefit. Thanks for tuning in.